You see the headlines every single day, right? Market up, market down. It's a ton of noise. But what if I told you that behind all of that chaos, the market is really just one giant, powerful game of tug of war? Well, today, we're going to pull back that curtain and see exactly who's pulling on the rope and why.
So what is it? What really makes trillions of dollars change direction, sometimes in the blink of an eye? It looks completely random from the outside, but it's not. It's a battle between very specific, very real forces. And by the time we're done here, you'll be able to spot them out in the wild.
Look, when you boil it all down, it comes back to the most basic concept in economics: supply and demand. Seriously, that's it. Think about it like a super rare pair of sneakers. If everybody wants them, and there are only a handful of pairs out there, guess what? The price is going to go through the roof. But if a stock is just sitting on the shelf and nobody's interested, the price drops. Every single thing we're about to talk about just pushes one of those two buttons, making more people want to buy or making more people want to sell.
Okay, so let's grab the rope and start on the sunny side of the street. Let's talk about the bulls. These are the powerful forces that create that awesome upward momentum, that fuel those big rallies, and define what we call a bull market. So what's giving the bull team its strength? First up is something called monetary accommodation. Basically, this is the Federal Reserve opening the floodgates and making money cheap and easy to get. They lower interest rates, so it costs companies less to borrow and expand. That, in turn, fuels robust economic growth. You'll see this measured as GDP. When the economy is humming, people have jobs, they're spending money, and that means companies are reporting strong corporate earnings. And then you've got the wild card, innovation. Think about the internet boom in the 90s, or what we're seeing with AI right now. These are total game changers that create brand new industries out of thin air and can power the market up for years. And the bullish momentum doesn't stop there. The government can jump in with pro-growth fiscal policy, like cutting corporate taxes. Suddenly, companies have a ton more cash on hand, and what do they often do with it? Well, they do stock buybacks, and this is so important to understand. A company uses its cash to buy its own stock off the market. That reduces the supply, right? And just like with our sneakers, fewer shares available makes each one that's left more valuable. All of this good news creates a really powerful emotion, positive sentiment. You know it better as FOMO, the fear of missing out. Everyone sees the rocket ship taking off and they want a seat, which of course just pushes it higher.
But, of course, that rope always gets pulled in the other direction. So now we have to flip the coin and look at the bearish forces, the things that cause fear, that trigger those big sell-offs, and can drag us into some pretty painful downturns.
So how does the bear pull back? Well, it's pretty much the bull's playbook just in reverse. First, the Fed starts to turn off the money spigot. That's monetary contraction. They raise interest rates, which makes borrowing more expensive for everyone, basically slamming the brakes on the economy. At the same time, you might have another problem popping up: high inflation. Inflation is like a silent poison for the market. It eats away at company profits, and it reduces how much you and I can actually buy with our money. All of this leads to bad economic news, recession data, and pretty soon companies start reporting weak earnings. When that happens, investors don't walk, they run for the exits.
And just when you think things are bad, external shocks can come along and pour gasoline on the fire. Geopolitical instability, we're talking wars, trade disputes, things like that, creates massive uncertainty. And if there's one thing investors hate, it's uncertainty. Then the market's own mechanics can turn on itself. Too many people borrowing to buy stocks, what's called margin debt, can lead to forced selling. Automated trading programs can get stuck in a nasty feedback loop where selling just triggers more selling, and it all snowballs into negative sentiment and outright panic. That's when the herd mentality takes over, and everyone rushes for the door at the same time.
So we've talked about all the data, the numbers, the economic reports. But this brings us to what might be the most powerful force of all, one that can sometimes override everything else: the raw and often totally irrational power of human psychology.
And this quote right here, it just nails it. The market isn't just a spreadsheet. It's a living, breathing reflection of our collective hopes and fears. You can think of it like a giant mood ring for the entire world, constantly swinging between two very, very powerful emotions.
And you might be thinking, how on earth can you measure an emotion? Well, believe it or not, we can actually get pretty close. One of the most popular ways is the Fear and Greed Index. It's not just a vibe, it actually combines 7 different market indicators. Things like market momentum, or whether people are piling into risky stocks, to put a single number from 0 to 100 on that collective feeling.
Okay, so what's the point? It's all about watching the extremes.
When that index drops into extreme fear, it often means investors have just panicked, selling everything without thinking. And sometimes that can create some amazing buying opportunities. But on the flip side, when that needle swings all the way over to extreme greed, it can be a warning sign that everyone's gotten a little too euphoric, ignoring risks, and that maybe the market is getting a bit overheated.
So let's bring it all home. When you put all these pieces together, you start to see that the market isn't just a series of random, chaotic events. It's a dynamic, constant tug of war between these two powerful, opposing sides.
And right here, this is it. This is the playbook for the whole game. On one side, you have the bull's case. Easy money, a strong economy, great company profits, and a whole lot of optimism. And on the other side, you have the bear's case. Tight money, a slowing economy, weak earnings, and pure fear. Every single day, these are the forces battling it out. The price you see on your screen, that's just the scoreboard in this epic battle.
And that brings us to the final and maybe most important question. Because now I'm turning it over to you. You have the framework, you know the players, you know what they're fighting over. So take a look at the world around you right now. Based on everything you see, which side do you think is winning this tug of war today?
Yeah, the algorithm's locked and loaded, feeling opulent. Every single trade I make is going professional. Let the numbers do the talking, watch the money multiply. Stacking up the wins until they're reaching for the sky. Winning in the game, feeling so alive.